well, we have certainly started to see the impact rising rates have had on the housing market. But what's been the big question for homeowners and home buyers in the current environment is really this. Should you go variable or fixed rates on your mortgages? That is a big question right now. Leah Zlatkin is a mortgage broker and expert at lowestrates.ca. She joined us live in studio this morning. Leah, great to have you in here.
Thank you.
I could talk mortgages all day because it's a fascinating product. And, you know, people, as you said, don't ever stop buying homes. It may have slowed down a little bit, but the business is still going on. So we're expecting another quarter-point rate hike today. I think we all kind of agree on that. So let's get beyond that and talk about then what's the advice that you're giving to people. If someone calls you in the morning today and says, hey, Leah, I want to buy a house. Is it variable? Is it fixed rate? How would you go through this with someone?
Yeah, so absolutely. There's a lot of people that are still looking at buying right now. We've seen the market slow a little bit, but obviously it's picking back up. The spring market is bound to be a little bit hotter than it's been in the past. And for somebody who's looking at buying a home, you have a couple of considerations to make. So the first consideration you want to make is, you know, what is the longevity of your risk? So for somebody who's looking at buying, I'm certainly not recommending variable right now. Definitely not recommending a 5-year variable. So at this point in time, what I'm typically telling clients is you either want to go with a 5-year fix if you want a lot of stability, but my personal preference would be for people to go with a 2 or a 3-year fixed. The reason why you're going to want to go with a 2 or a 3-year fixed is that it's going to offer you that security and shelter for the next 2 to 3 years to hopefully ride out this volatile rate environment. At the end of that point, hopefully rates will be lower and you'll be able to renew into a lower priced product. So a very good, you know, variable or fixed rate at that point in time. But based on today's rate environment, you know, bond yields have been going down a little bit. Again, still very volatile. Variable rates are obviously going up today. So if you have a variable rate and you're a current mortgage holder, I mean, you better stick with your variable. It's a little too late to switch over to fixed at this point in time. But for somebody looking to buy, 2 or a 3-year fixed.
Why is there that hope, Leah, that maybe in 2 to 3 years that things may be going down? What's the sort of projection or forecast that you kind of look at and say, hey, you know what, it's likely going to get better?
So a lot of the economists are saying that once we deal with this inflation, the variable rates will start going back down. So obviously right now, the Bank of Canada has been increasing the Bank of Canada overnight rate steadily for the last 8 consecutive announcements. And what we're seeing is they're trying to really stomp out inflation. So in doing so, when we look at the latest inflation reports, inflation is down, but it's still not gone. And you're seeing it in the grocery stores, you're seeing it everywhere else. You want to see that actually come to a stop. So what we're likely to see is we're likely to see a hike now. We may see a hike on March 8th. And then after that, what we're likely to see is we're likely to see a hold pattern for the next 6 to 12 months. At the end of that, once we know that inflation is truly gone, then the Bank of Canada may start adjusting down. But we really don't know if that's going to be the case. And with volatility the way it is, you may see, you know, oil prices start to hike or something like that. That may affect variable rates as well. Whereas fixed rates, the bond yield is based on the securities in the system and whether they think that it's going to go up or down. And so we're starting to see bond yields come down. And ideally, the 2 to 3 year trajectory is that everything will be much more stable, inflation will be gone, and we'll start seeing rates come down again.
So what has this meant to your business? We only have about 30 seconds left, but you know, we saw such a crazy real estate market for the past couple of years. Just personally to you, how has your business sort of evolved over the last sort of 6 months or so as we've seen this rate hike period?
Yeah, so I mean, last year was the busiest year for every single mortgage broker in Canada. This year has been a little bit slower. It's a lot more refinancing, a lot more people just looking to switch lenders, some people moving away from their variable products. But in general, we have seen a little bit of a slow in terms of purchases. There are still lots of people buying, though. And even on the weekend, you know, I talked to a couple of my realtors. They're actually seeing lineups at their open houses. So the market's coming back, I think.
Interesting. That's a lot of psychology, too, from the buyer side as well, I suppose. Leah Zlatkin from lowestrates.ca. Great to talk to you. Thanks so much for being here.
Thank you so much for having me.